Seeds of Wisdom RV and Economic Updates Monday morning, June 30, 25. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon. Good morning. Dinar recaps the end of bank branches, how Europe's digital euro and stablecoins are reshaping finance. The financial world is undergoing a radical digital shift, and physical bank branches are quickly becoming obsolete. Banking faces a digital reckoning. The slow disappearance of local bank branches across Europe reflects a much deeper transformation. Digitalization, AI, and automation are now reshaping how we work, shop, and save, leaving traditional banking struggling to keep pace. Black Small Square in Germany, over 560 branches were closed in 2023 alone, a 2.8% drop. Black Small Square. This is part of a decades-long contraction, from nearly 60,000 branches in the 1990s to just 18,933 today. Black Small Square. High rents, shrinking populations, and the dominance of e-commerce have hit brick-and-mortar services hard. The quiet death of Germany's bank branches is just one symptom of this evolution, but it's a global story now playing out in real time. Deutsche Bank, leading the downsizing. In March, Deutsche Bank announced a wave of layoffs and branch closures. "We are witnessing a fundamental transformation in the German banking sector," said CEO Christian Soing. Black Small Square. The bank will cut 2,000 jobs and shutter a significant number of branches this year. Black Small Square. Client consultations are moving to video calls and digital platforms, trading human interaction for efficiency. This paradigm shift threatens the personal trust built through face-to-face banking, once considered the bedrock of retail finance, crushed by policy, not just progress. Technological change is not the only culprit. The European Central Bank's (ECB) ultra-loose monetary policy has had devastating effects. Black Small Square. More than a decade of negative interest rates crushed banks' ability to earn profit through traditional lending. Black Small Square. Banks were squeezed by regulatory costs, penalty interest, and flattened yield curves. Black Small Square. The ECB's moves helped heavily indebted Eurozone countries like Spain, Italy, and France, but at the expense of private banks and savers. The branch closures, layoffs, and pivot to digital aren't just market-driven, they are also policy-driven. Stablecoins and the digital euro, the final blow? The next major disruption comes from stablecoins and the proposed digital euro, two innovations that could sideline banks entirely. Black Small Square. Stablecoins, pegged to fiat currencies, offer fast, low-cost global payments. No need for banks or wire transfers. Black Small Square. DeFi, decentralized finance, lets users transact via smart contracts, bypassing traditional credit and payment systems. Black Small Square. As adoption spreads, the need for checking accounts, branches, and bank-issued cards may vanish. The digital euro, being developed by the ECB, may deliver the final push. Black Small Square. It's programmable, blockchain-based, and bypasses commercial banks entirely. Black Small Square. Retail customers could hold digital euros directly in digital wallets, making bank intermediaries irrelevant. Black Small Square. Bank branches, long seen as hubs of trust and cash access, could become completely redundant, a new financial era. Europe's digital currency ambitions and the rise of decentralized technologies signal a permanent departure from legacy banking infrastructure. In this new landscape, banking becomes faster, but more impersonal. Traditional financial institutions lose control. Retail customers migrate to central bank-backed platforms. The local branch, once a staple of every town square, may soon be no more than a memory. US dollar faces historic stress test as BIS issues dire warning on global fragility. The US dollar, long considered the world's most reliable safe haven, is facing a historic credibility crisis as global financial trust deteriorates. Amid rising policy turbulence in Washington, the Bank for International Settlements, BIS, has issued a stark warning on the fragility of the global economic order. BIS. New era of heightened uncertainty. At the BIS annual general meeting in Basel on June 29, General Manager Augustin Carstens declared that a once promising recovery is now faltering. The global economy has entered a new era of heightened uncertainty, Carstens warned, noting a reversal from earlier optimism driven by easing inflation and modest growth. The catalyst: U.S. policy chaos. A sudden pivot toward broad-based tariffs and aggressive fiscal expansion has shocked global markets, undermining confidence and weakening the dollar's standing. Dollar depreciates as yields rise. An alarming signal: the U.S. dollar depreciated even as government bond yields rose. An extraordinary, troubling combination, Karsten stated. Black small square. Typically, rising yields strengthen the dollar. Black small square. This time, however, investors fled the currency, shaken by erratic policy shifts and unpredictable rhetoric from Washington. Black small square. Market volatility soared, and the dollar's safe haven image cracked. Karstens added that discussions about penalizing foreign holders of U.S. securities, challenges to central bank independence, and legal system uncertainty further deepened the crisis. Structural risks and global fragility. Karstens emphasized that the world's financial system was already under stress. Weak productivity growth. Unsustainable fiscal positions. The rise of unregulated non-bank financial institutions, NBFIs. Now, tariff-driven trade fragmentation is making matters worse, fueling inflation and limiting economic flexibility. These measures often fail to achieve intended goals and instead deepen structural challenges, Karstens warned. He called for credible reforms aimed at Black small square. Reducing trade barriers, Black small square. Improving regulatory clarity, Black small square. Investing in public infrastructure to support sustainable growth. A call for financial reform in the digital age. Karstens also turned his focus to emerging technological threats and opportunities. Major innovations like the entry of big tech into finance, central bank digital currencies, and artificial intelligence are challenging and reshaping the financial system. He warned that unregulated innovation could magnify systemic risk, particularly if NBFIs continue to operate without proper oversight. To meet this moment, Karstens proposed a new global financial architecture built on Black small square. Tokenized central bank reserves, Black small square. Government bonds integrated into digital ecosystems, Black small square. Stronger oversight, parity between banks and non-banks. The goal: restored trust, increased transparency, and future-proof global finance. Conclusion: a turning point for the dollar. As market dynamics shift and investor confidence wanes, the dollar's status as a global safe haven is being seriously questioned for the first time in decades. The BIS's warning is clear: without serious reform, the world may be heading into a prolonged era of economic instability and fragmentation. The dollar isn't just facing market pressure, it's confronting a global reckoning of trust. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon. Source: dinarrecaps.com